We are live, sir. Good evening.
All right. This is episode 22 of the Beef and Bitcoin podcast with your hosts, Brett and CH. Today's topics, SEC versus Kick. Looks like the ICO winter might be getting started here. India versus Bitcoin. We got India proposing some draft legislation around cryptocurrencies, so that's not a surprise. And then the last thing we wanted to talk about was just this stacking sats calculator and this dollar cost averaging calculator that people have been using and kind of getting a kick out of, seeing how much BTC would have had you been stacking consistently over a certain period of time. It's pretty fun to see. But yeah, man, a lot's happened since our last podcast. What's been going on?
Bitcoin's looking pretty bullish. Yeah, I mean, there's a lot that's been going on, macro and everything. We're not covering this one, but the Kick ICO was pretty interesting because I remember when this was happening. It happened for those that weren't paying attention to crypto at all in 2017, or just obviously weren't, like I was pretty obviously into it. ICO craze really picked up. Like I want to say June. June was when it really went crazy. Maybe a little earlier in May. But June, it went crazy. July was crazy. August. And then September. I wrote an article in September of that year in 2017. I think it was like mid-September I wrote it. It was at the point where there was over 100 ICOs open accepting money at the time. And then each additional day for the rest of September, which was 15 days, there were 5 or more new ones launching each day. And it was getting ridiculous. And that was when Kick raised its $100 million. I don't think it ever really. I don't think any retail investors got into it. I think it was pretty much a, closed door kind of thing. But they raised basically $100 million. And the exact amount was 168,073 Ethereum.
Wow.
But nowadays that price would be 47.5 million based on the $282 ETH price, the Ethereum price. And yeah, I mean, Kick. We were just looking at it earlier. So it started in 2010, I guess, or launched, and we were talking about how it was kind of like bigger back then, and it was kind of dead. And so there's a pretty interesting thing here. There's a tweet thread about it by Stephen Pauly, and one of the SEC versus Kick, because the SEC is going after them, because it was just basically it's a security, and I'll read this little section here quickly. Because they weren't doing it for the utility token purpose. They were doing it because Kick was dying. Like, Kick didn't have good source of revenue, and, obviously Kick isn't huge. Like, I don't know anyone that uses Kick personally. Do you?
I remember somebody using Kick in 2010 when I had first heard about it.
Well, yeah, but right now I haven't heard anyone mention it besides for the crypto portion. I'm just gonna read this little part. I think this is from the actual SEC thing, but basically the title reads, "Having no other options, Kick pivoted to digital tokens. Facing steadily declining cash reserves and no reasonable prospect of generating meaningful revenues from its current business, Kick's executives discussed the idea of pivoting to a digital tokens as a way to raise capital. By early 2017, Kick's senior management had concluded that ICO was Kick's only option. One member of Kick's board of directors, soon after discussions, began to describe the plan as a Hail Mary pass. From the outset, Kick saw investors and speculators as a crucial target audience for an ICO. For example, in a meeting on February 16, 2017, Kick's executives and directors discussed the need to craft an offering that would appeal to crypto investors and growing market for crypto assets, highlighting 50% 3-year CAGR, which is compound annual growth rate, for such investments. At this meeting, Kick executives and directors anticipated that crowdfunders would invest in tradable digital tokens of a non-blockchain company if offered good risk-return potential. And the whole thing with this was during that time, as I said earlier, the ICO scene was insane. You could have made a white paper, launched a website, and copy and pasted code, and you could have became a millionaire. It really was.
That's what Tron did.
Exactly. Tron was literally, his whole white paper is plagiarized, And well, now Justin Sun's. I don't know if did he eat lunch with Warren Buffett yet. He paid $4.6 million of the ICO funds.
I don't think the lunch has happened yet, but I'm sure we'll be making memes about it when it does, for sure.
I mean, so just reading that section there, this was a raise as a security. Like, this would be like a company like, for instance, Tesla recently, when Tesla was running out of cash because Tesla's a sinking ship. And Elon Musk was like, yeah, we're going to raise $2 billion. And like the majority of it, I think, was like 75% was in like, I think bonds. And then the other 25% was in equity. So either way, they were both securities is the point. This is the same thing, except at the time, like, since like government is always slow with regulation, that was why that whole ICO boom happened. Like, it happened and people really didn't know what was going on. But then it kind of caught up, obviously. And I'm just going to keep reading through this little sections here from this tweet thread going through. And I think this is from, do you know exactly where this is from? Is this from like the SEC paper?
I believe it's from it's like the official document, but.
Yeah. So following the meeting and email to several employees dated February 28, 2017, Kik CEO described Kik's new crypto story, which would be a new way to raise capital. He wrote the company would sell some tokens to crypto investors to raise money, and that more demand for tokens would mean value goes up, and therefore buy today, sell tomorrow, profit. Yeah. I mean, it's that.
Yeah. You can see anybody who was investing in this was investing in it with the expectation of a return afterwards, right? And that's it's part of the Howey test, I think.
Yeah.
So it's not a surprise, but at the same time, you can tell the SEC did their homework on this one, and they clearly have a strong case against Kik. But I'd also like to say, as fun as it is to watch this kind of happen with these things that are basically securities, sometimes, I don't want to see the SEC get involved in this because it just makes things, you cringe on that free market. And the best way for people to learn is to get wrecked, and then everyone will just avoid ICOs eventually. You know what I mean? By watching others just kind of, lose their shirts. Every person knows somebody who got wrecked in an ICO, and then as more people get into the space, that knowledge flows down naturally. Like, don't send your ETH to this address for X number of tokens, or, it's just
you're right. No, you're right.
What I mean? It's like that's like as kind of as it should be. Well, I don't like to think that anything should or shouldn't be a certain way, but all this does is make when people actually need to raise money for a good idea more expensive because there's increased regulations around it. If we're going to see, token raises or equity raising in the future in a different capacity than we see today, you don't want that to be
a barrier.
Costly to do, right? You don't want to keep putting up all these barriers. You want, if there's like Trezor, for example, if they needed to raise and they were, raising from some sort of equity token that isn't supposed to be tradable as money, like they literally need it to raise, or they do a colored coin or something, that's totally understandable. And you wouldn't want to increase these barriers to get that done. Everybody needs to read what they're trying to do, their investor presentation, decide if that's a good idea or not. Nobody took a look at what Kik was going to do. Everyone's just like, let's go for it. I'm going to send my ETH and try to catch a pump. And maybe either you did or you didn't, but people certainly got wrecked. Dude. And that's the best lesson, right? People getting wrecked.
Yeah. And I think the whole ICO model, as much as it was a shit show, is revolutionary. It changed the way of allowing the small man, the retail investor, the dude who doesn't have the access to venture capitals, hedge funds, etc., to invest in anything from anywhere in the world at any time. And so, like, while this, whole ICO craze did die down, I think we'll see a resurgence throughout the next decade of how companies raise money, and it's probably going to change everything as we know it. And I think eventually, same thing with securities in general. it's going to be a different world over the next decade. It's going to take some time, but it's going to change. Do we even know what happened to the Kick token? Did Kin ever even trade? Is that even tradable?
I have no idea. To be honest with you, I'd never even
looked at it. If he made to the market. I can't remember.
You totally nailed it. I mean, it certainly changes everything because
there's the Kin. I think it's Kin if I remember correctly.
Yeah, it is Kin. K-I-N.
I found it. It's ranked number 203 on CoinMarketCap. Oh, there it is. Dude, it did pump fucking hard though. It did pump. Like, I'm just gonna see. So it's, yeah. I mean, obviously, so it performed pretty poorly when it got to market, but it did go all the way up to $1 billion market cap.
So so people had 1 week to make money, basically.
Yeah. Well,
it was, you could a short period of time.
Well, you had like a few months to buy it, and you could have basically 20 extra money. It went from basically a 50 million market cap roughly to a $1 billion market cap. But that peak didn't last long, and it has not returned at all. Its market cap is now 23 million. I wonder where it trades. It doesn't even trade, dude. It trades on nothing good. Coin Tiger, it's volume.
See, that's what I mean. Like, if people think that, here's something I'm gonna say. For anybody to assume that any of these tokens are going to compete, they need liquidity. Like, that's what it really comes down to. The most liquid good in an economy is money. That's why the US dollar is money. It's the most liquid good. The derivative markets for dollars is humongous, right? I mean,
yeah.
When you think about treasury bills, I mean, it's massive. If this thing is trading on Coin Tiger or any other shitcoin, I mean, eventually it will start to make sense that you're not getting in early. It's just a shitcoin.
Exactly. And like, I just pulled open the CoinMarketCap just because that had $1 million volume over 20 hours. It was just over, let's get $1.5 million. The volume for Bitcoin right now is, according to CoinMarketCap, which is, well, we know now fake, but It says 20 billion here. It says the current crypto volume is 67 billion, or 24 hours, 67 billion. And the market cap is 272 billion. Actually, I haven't looked at the crypto market cap in a while. Let's see where it's
Neither have I. But, even if it's incorrect, which we know that it is, you can just see in multiples that that's the difference in what's being traded. I mean, it's pretty obvious. If anything needs to compete, it's going to need a lot of liquidity. And that's easier said than done.
Yeah. There's a few more things I want to touch on here. On or about April 10th, 2017, in advance of meeting of Kick directors later that same week, Kick CEO sent to the directors his PowerPoint presentation for the meeting entitled Kick and Cryptocurrency, together with a report prepared by Kick's consultants. The material highlighted results from the consultants' crypto investor survey and crypto investor expert panel, and included funding perspectives, slides showing revenues from average historical token sales, and predicted a capital raise of $100 million easily from the offering. The material set forth a roadmap for the token sale later that year and included steps for an investor marketing plan and exchange outreach. I think that's hilarious. Like, Kick and cryptocurrency, and I wonder how much those consultants are paid. They probably
so much.
Oh, they probably got paid stupidly. I bet you they're paid easily 6 figures for some very, very easy advice. They could have been paid 7 figures for all we know.
Yeah, I'm sure they made 7 figures. If I had to imagine. I mean, that's unbelievable. That's unbelievyou guys, you should print your own money if this will work. I promise you. I mean, it worked. It
really did work, though. It worked if you were able to ICO at all before, like, even if you're able to ICO in early December 2017, you probably made money. But realistically, if you ICO'd any time that year, your token eventually pumped. It just did. The whole market did. And as we were talking about, I think in another podcast, like, because of the way Bitcoin is, like, when Bitcoin peaked before all the altcoins or shitcoins, most of the shitcoins, there's a pretty interesting graph that showed, like, Litecoin, Bitcoin, and a few others. Certain types of coins peaked, like, December 17th with Bitcoin's 20K top. And then the first week of January, all, like, the Ethereum ICO coins, and other shit tokens and everything peaked too. And so it made for a pretty interesting showing how like people were offloading Bitcoin because I have 20K Bitcoin. Where we're going to move this money? I'm going to move it into Sidecoin. I'm going to move it into, Ethereum. I'm going to move into something else because holy shit, I want to get out of it because I know, I know 20K is unrealistic type of thing. I'm going to keep going forward here though. Kik pitched the KIN offering, which KIN's the token we mentioned earlier, that's the name of the token, offering by emphasizing the opportunity to profit. On May 25th, 2017, Kik CEO spoke in New York City at the Token Summit, a conference for people interested in digital assets, and publicly announced its offering of KIN tokens. Kik chose the Token Summit because, as a Kik executive observed, the primary audience for the initial announcement really is an investor community, and such investors were expected to be in attendance. The presentation was videotaped and posted by Kik on YouTube, making it accessible to anyone on the internet. We're going to get a few more of these little blurbs here because they're pretty good actually, and just showing how this was blatantly a security raise. And now in hindsight, like reading all this, it was, clearly Kik was running out of money, as it stated earlier. They needed money. They saw an opening. How can we raise money? How can we, I guess not legally, there's no, I guess this was a huge gray zone. People don't know, like, I didn't get in super early to crypto. I was in, really got into it in, somewhat April and May of 2017. There's still, at that time, there was no exchange regulation. It wasn't until towards the end of the summer that exchange regulation and, asking for proof of address, etc., stuff like that, all those other things really came about. And it really changed drastically, obviously, by the end of December, or by the end of 2017. But prior to that, 2016, 2015, you go back, there was no regulation at all. Most exchanges, all you needed was an email address. That was all you needed. I'm going to keep reading forward with this, though. For example, at the June 28, 2017 San Francisco Bitcoin meetup, Kik CEO specifically cited the .com era, predicting that people are going to make a lot of money with tokens and ICOs, and directly comparing investors who would buy Kik tokens crowd sale to the venture capitalists who had earlier invested in Kik. So I think this is a quote from him. Excuse me. So I think, for me, I think it's like the .com, for better or for worse. So there's a lot of hype right now, and people are going to make a lot of money. People have made a lot of money. People are going to lose a lot of money here. This is coming, right? It's going to happen multiple times as we move through this innovation, but at the end of the day, Amazon and Google came out of the .com. And so this is how I view it. Like tokens and ICOs, I think 90% of them are probably going to go to zero, and people are going to lose a lot of money, and the regulators are going to come in. They're going to say, how do we make this, and this is inaudible for, I don't know, I guess they're recording, for innovation, but still make it safe for consumers. And everyone's going to be trying to figure this out, and it's going to be crazy. It's going to be like, I was in high school at the time, but in 2001, in 2000 or 2001, whatever year it was, it's going to be like that all over again. I think for us, we believe, a few huge economic entities are going to come out of this space, and I think actually a few huge economic entities have already come out into the space. And so I think, everything, it's risk and reward, but I think, we have a good story, and I think we're trying to do it in a fair way, and I think our heart's in the right place, and we're going to do everything we can. What really scares me at the end of the day is disappointing people, and I think what scares me about doing a crowd sale, so I'm not trying to laugh, but that's just funny. Crowd sale is before. If Kik failed, I would disappoint a bunch of rich people. But now if Kik fails, I will disappoint a bunch of regular people. And that really weighs on me. We're going to do everything we can to make it win for everybody. These comments were recorded, streamed live on the internet, and posted on YouTube. Yeah. What do you have to say?
I think the important thing here is be very skeptical when you're seeing anything like this, where, there's a raise for a token. You really got to this could have been avoided if you did 25 minutes of research on Kick and saw how long it's been around. See that, like, if you've never even heard of it, that should be a red flag. It would be one thing if every person that you knew used Kick and they were doing a raise, then maybe that would make more sense to you. You'd say, oh, okay, it's pretty popular. Facebook's doing a coin, and clearly people are going to look into that more closely because Facebook's gigantic. And like, if you've never heard of Kick, why would you even be interested in Kin? And the only reason people were is because they were trying to get their bags pumped. I mean, everybody wants to make money. It is what it is. Everybody wants to try to catch a pump in an ICO. Like, everybody wants to get rich overnight because it happened. Everybody was watching other people get rich in 2017. So it's totally understandable, but be skeptical with all these, because this one was pretty bad, but everybody's going to learn from this and hopefully not do it again.
Yeah, hopefully. As we said earlier, Bitcoin was looking pretty bullish. If we do get to that 20K mark and surpass it, I don't know what will come out of it, but that will probably lift a lot of the altcoin market with it. And again, it will probably wreck a bunch of people, but that's just to mention. And if you're listening, obviously this is never financial advice, but if you end up going into crypto because of the price of Bitcoin keeps going up, just be smart, please.
Yeah, that's a good point. As I'd like to say, stack responsibly. Pretend that this money could go away, and think in years, not in days, weeks, or months. This is for your future. At least that's the way I like to think about it. Every Satoshi that I stack is for 10 years from now when I'm really going to need it. So, and I'm willing to live with that if I lose everything. So that's how you know.
Yeah, and I only say that because I know you got hit up way more than I did, but like when November, December, when that happened, even January that year of November, December 2017, January 2018, I was getting texts from the most random people who would never even think were interested in financial markets, crypto, whatever, but they were all interested because price was rising. And like I think I mentioned at one point, like when I was at school at the time, like there were people coming up to me at like bars telling me, because like people knew it. When I say bars, like going out to drinks, people coming up and telling me like how they bought like Litecoin at $100, and this was in like Litecoin had broken $100 in early December. I was like, oh shit, this is like, and people were asking what to do with it. And I was just like, this is not good, because you got people just buying blindly because price was rising. But yeah, just be smart. I'm gonna keep reading this thread here though. Kick also tweeted assurance regarding the future tradability of Kin, often using a Twitter account in the name of the Kin Foundation. Oh God, I forgot about that name, which Kick had not yet created. For example, on August 29, 2017, Kick wrote that many exchanges had indicated they would like to list Kin. I can barely read this, but Kin token sale date announced Tuesday, September 12th at 9 a.m. 50 million pre-sale, closed with a hard cap of 125 million total, and they've raised just under 100 million. And then someone commented, where can we store bought Kin tokens in an Ethereum wallet? What exchanges will use Kin? And then person, lists, for example, like Poloniex, Bittrex. But what time zone they're saying? I don't know why I say times. Oh, because I think they're asking what the token raise. Oh, but it says it right there. Eastern time. So yeah, that person asked a dumb question at the end because ET stands for Eastern time. But anyways, Kick said yes, Ethereum wallet, because Kin's an ERC20 token. The beloved ERC20 token. Everyone copy and pasting code. Oh God. Yeah, no, this is like, is the Kin Foundation even a thing? Like, and as we were saying earlier, like they're not on any good exchanges. I didn't see them listed on Bittrex. I didn't see them listed on Binance. Not Poloniex, not on obviously Coinbase. I didn't see them listed on any good exchanges, and it's clear because they have 1.62 or $1.6 million in 24-hour volume, which is nothing compared to the rest of the market right now.
Yeah, it's terrible.
Liquidity is shit, basically. And then at the end, I'm just gonna read. There's two more little things here. I think we'll close this up here, but the guy tweeted said, but we have SAFs, and SAFT is it's a secure asset for I can't remember. I'm gonna f it up. It's something secure, something for. I'm blanking on it hard right now. It's something token sale. I just cannot remember for the life of me.
Oh yeah, I can't remember either.
And I used to know it. Oh, there it is. It's simple agreement for future tokens. God damn, I couldn't remember it. That's what it was.
Uh-huh.
So I couldn't remember for the life of me. But so although Kik's simple agreement for future tokens specifically stated that the SAFT was itself a security, it failed to state that the kin to be delivered under the SAFT were securities sold pursuant to the SAFs. And although Kik's PPM claimed that the offer and sale of the SAFs were subject to an exemption from registration under Section 4A.2 of the Securities Act and Regulation D promulgated thereunder among the United States laws, Kik did not claim any exemption for the offer and sale and the SAFT and through the SAFT. As such, Kik's offer and sale of the SAFs and Kik's offer and sale of the kin purchased under the SAFs were not registered. By entering into the SAFs, Kik locked itself into an aggressive schedule for issuing kin, and that did not depend on whether or when kin actually could be used to buy goods and services. The SAFs created a September 30th, 2017 deadline for the public sale, which the SAFT and the PPM called the network launch, a deadline that Kik could extend only once by a maximum of 60 days until November 30th, 2017. If the public sale did not occur by that deadline, the SAFs required Kik to return 70% of the invested cash to these investors. Wow. So what were they going to do with the other 30%?
Yikes.
Yeah. I'm going to read this little final part here. Also, before the start of the kin offering, or about May 5th, 2017, Kik CEO sent the board of directors a series of PowerPoint slides that warned risk security laws. I'm just going to leave it there.
It's so bad. It's pretty obvious. But I mean, listen, this needs to happen so people can kind of wake up, you know?
Yeah, no, it needs to happen. It's a good time to transition.
Yeah. So, India versus Bitcoin. Same story, different country. India drafts a bill, proposes pretty much 10 years of jail time for using cryptocurrency. So that's mining, buying, trading, holding, dealing with it whatsoever would, immediately become illegal. And you would be subject to 10 years in jail. That sucks, but totally expected. I mean, and on one hand, it's super bullish because why else would you ban it unless you were afraid of it, right? So the more times that cryptocurrencies get banned, honestly, the better, because that just means that it's working. And the countries who decide that they want to profit greatly from it will allow it to flourish. So when you see countries start to embrace Bitcoin more seriously and start to profit from it, whether it be through tax revenue or domestic investment from businesses coming and setting up shop, that's awesome. And it's going to make countries start to compete against each other to take advantage of this. Essentially, it's a land grab, right? I mean, the country with the most Bitcoin at the end of the day will do very well for themselves. But what do you think? I mean, is this a surprise that India is trying to ban cryptocurrencies?
All I have to say is China's banned Bitcoin probably 100 times in the past, 8 years or whatever it's been. So, I mean, here again, there's pretty much no way to stop it. And sure, they could ban it on the internet there, but people use VPNs or whatever to get around it. For those who don't know, VPN stands for Virtual Privacy Network. Allows you to surf the web more securely. I recommend them, but that's just me. It's going to be interesting. I think very shortly here we're going to find out how much demand there really is for Bitcoin, and we're going to see, the current fiat system isn't going to make it much farther. This next coming crisis will ruin it. And the question is, where do we pivot? Is it a pivot to Bitcoin? Is it pivot back to a gold-backed currency or asset-backed currency? I don't know. And I know this is getting a little off topic, but that's what's going to, as you said, it's a digital land grab. And whoever country has the most Bitcoin, will that be a big deal? And that's a good question. I feel like when a certain country really is like, oh wow, I want a lot of Bitcoin, which I'm surprised, and maybe I'm wrong. Maybe there are countries buying Bitcoin, but I feel like if someone like Saudi Arabia was like, oh, we want Bitcoin, or Israel's like, we want Bitcoin, they could just. I guess it'd be pretty hard to buy Bitcoin considering the amount of flow right now. You'd drive up prices obviously as you try buying more.
Right.
But I think it'd be pretty obvious when a really big buyer or something like that starts happening. And obviously there could be OTC deals, but it's going to be interesting to see what happens here shortly.
Yeah, for sure. I mean, that touches on the scarcity aspect of Bitcoin. We talk about, there's not that much liquid supply that is tradable. And you can tell that happens because Bitcoin likes to jump in price. It's never gradual. So you have a $5,000 Bitcoin OTC order, like it moves. And as the supply starts to dry up, even people who are stacking sats on a weekly basis or whatever, it's literally drying up the supply and the available and liquid BTC available for purchase. That's a fact. That's just how it works. So you really get to see the supply and demand play out so well with something that is scarce. And that's why I've used the term land grab before, because it's a set amount of land and it's getting released at a predetermined interval and everybody knows what that is, but not everybody realizes that you can know that, right? So the halving's coming up in May of 2020 and the new supply of Bitcoin on a daily basis will go from 1,800 to 900 a day. That's huge. The supply gets cut in half every 210,000 blocks, I think, and that's roughly every 4 years. That's huge, but that's predetermined. It's written in the software. That's a consensus rule. And that's not going to change. And everybody knows it who take, a little bit of extra time to try to understand Bitcoin as best as they can. But the majority of people don't have any, like that. To me, that information is not priced in because not everybody knows it. I could be talking to somebody at work who's into Bitcoin and cryptocurrencies and maybe he trades a little bit here and there. And I could be like, oh yeah, man, the halving's coming up in May of 2020. He has no fucking clue what I'm talking about. So that those are the other people who are investing and stacking sats or whatever. They have no clue. So I think that's just something to keep in mind. You have some asymmetric information in this. And, speaking of drying up the supply, there's a stacking sats calculator, two of them that I've kind of come across so far. And the reason that I was taking a closer look at these is because I thought that would be a good project to start to look at as I'm trying to teach myself how to code and how to program. And you got to take a look at one of these. I'll send you this link so you can bring it up on the screen for the people who are watching on YouTube. But it's pretty much a dollar cost averaging calculator, and it's kind of like a dashboard view. It's really, really slick. And I'll let Brett bring that up.
I think I tried the stacking sats link, and just as you can see, if you saw my screen there, it's not there. Okay, I brought that up. Cool.
So this one.
So I gotta pull it up the other one, but yeah.
Yeah, and you can so it allows you, it teaches you all about dollar cost averaging, what it is, whether or not it's useful, what is a Satoshi, helps you learn a little bit more about Bitcoin. It's a really awesome site and a good project. So if you were to, and you can go ahead and type this on your screen if you wanted to, you can pick any amount on a weekly basis. You can say, I don't know, 25 bucks a week. You hit the drop down, you can change it to a repeat purchase, make it weekly, and then you can accumulate that for say 2 years and starting 2 years ago.
This and it'll go through. This was the cool one, the $1 one daily since the beginning.
Oh yeah. That was awesome. That's actually I wrote that down. So pretty much if you if you did $1 a day since
the Genesis block, basically.
Since like the Genesis block, yeah, from the start, you'd have like $13 million worth of Bitcoin, some ridiculous number, which, nobody got started from the beginning, but you can kind of go back since the last time you heard about it. Or since the first time you heard about it, and
I'm not gonna lie that it would have been pretty pointless to invest after like 2011. The dollar wouldn't have went pretty far, but because it says the total invested here is $3,255. So really, okay, maybe I'm wrong there, but basically, if someone did this theoretically after 2011, they'd been fine. They would have stopped. Right.
You can see they may have stopped. Yeah.
Yeah.
So, but it's nice because you can go back and say, since the first time you got interested and you want to double check how you would have done had you just, say bought 25 bucks worth a week. So if you accumulated for the last 2 years, we're in mid-June 2019, you would have invested 2,600 bucks and have pretty much almost half a Bitcoin. And that would be worth $3,800 right now for total return of 48%. That's not too bad for 25 bucks a week for 2 years. I mean, it's almost unbelievable when you think about it as a land grab. Like, whoa, you got half a Bitcoin. Not too bad. Some people, we're getting close to the point where as the price continues to rise, it will be unthinkable for most people to have that much Bitcoin.
Yeah.
Like, I mean, we were pretty much there at 20K in December of 2017. I'm sure people were thinking like, well, like that's it. Like, I'm never going to get to 1 Bitcoin.
Yeah, no, really.
Like that's out of reach for most people. I mean, there's no other way to slice it. So when you think about it this way, it's like, well, do you have 25 bucks a week to put away, or you can, even if you want to consider it lottery tickets, whatever you want, you spend 25 bucks a week on dumb shit as it is. You can pack your lunch like I do and take that 25 bucks and stack some sats, and maybe in a decade you'll be able to pay for your kid to start a business or something. Who knows?
Yeah, I was just gonna say, I blanked on it again. So yeah, as you're saying, the 20K top. When 69% of Americans have less than $1,000 in savings account, yeah, that's why. Like, obviously, this has gotten ridiculous, and now it's at whatever. It's basically at 9,000. It's at 87 or 88 right now, 100. But it really is it obviously is getting like that again. Where if we do go anywhere near 20K, it's gonna get, the numbers are gonna get retarded. That's all I'm gonna say. The numbers will get retarded, and as we've said before, like, mainstream media will not cover this until it gets close to 20K again. Like, besides
CNBC. That's a really good point. I mean, it was FOMO fest at the end of 2017.
It was such FOMO fest, dude.
Like,
it was so short-lived too. It was
and that's the thing. That's the thing that people don't realize. The bull market, if you were to look at it on the chart, you'd think like, oh, that was a half decent amount of time. If you pretend that you start sometime in 2015, like, okay, this was the exact bottom, and then year end 2017 was the exact top. That looks like a really long time. But then when you realize we pretty much went 20x from the beginning of 2017 to the end of 2017, and the majority of those gains really came in, I don't know, call it 8 weeks. That's not that much time. So people will talk about these bull markets being or lasting a very long time, but the majority of these gains can happen extremely quickly. So at the snap of a fingers, all of a sudden you'll never have 1 Bitcoin. Like, it's just totally out of reach. And that's where trying to time the market with something like this, something like Bitcoin, not that it doesn't make sense, it's just really fucking difficult to do. Where was everybody screaming at us to buy at 3,200 you know what I mean? I didn't hear anybody saying that. Everybody was quiet. Nobody was even talking about it. Nobody was saying, guys, we're gonna pump to 9K some in the middle by the middle of 2019. You guys should be stacking like crazy right here. It was nothing but crickets.
Yeah. No,
and everyone was so bearish. Everyone was waiting for 2,800. Remember when 2,800 was coming? It never came.
No, it was, we went from, it was like we pumped, we hit 3,000 and then it went down to 1,800. And I remember.
Oh, in 2017.
Yeah, in 2017. Oh yeah, I guess. Yeah, you're talking about. I'm thinking of 2017. Sorry.
I was thinking earlier this year. I was thinking when we were at 32 at the beginning of 2019. Nobody was saying, guys, this is unbelievable. Like you have to stack here. Like you're a fool if you're not buying here. Which I mean, I guess in hindsight you might be, but that's what I mean. Price drives adoption, right? Nobody's screaming to buy when it goes down. Only on these little dips, everyone's like, oh, I'm buying the dip. But where were you when the fucking dip was at 3,200?
That's a very good question.
That's what I mean. I say it like that because it's like, all right, well, I'm gonna have to capitulate to myself that I'm never gonna out trade anybody, or I might out trade myself because I didn't stack consistently.
Here's another example, and why that one of the podcasts recently mentioned about the Binance margin one. You don't need margin. For instance, Litecoin, I know it's a shit coin, but I'm just going to mention Litecoin's up over 500% since its December low. And Ethereum's up 300%. Bitcoin's up 130, 140%, whatever it is. No, it's more than that. Bitcoin's almost 200%. It's 180. The numbers, as I said before, the FOMO comes back and people don't realize how far we've gone since December. We've went a long way and no one's talking about this. So that's what scares me. It's so does this mean we're going to go through a full another cycle and we're going to see $1,000 Litecoin, $100,000 Bitcoin, $3,000 Ethereum? I don't know. I have zero clue. But because we talked about before, this is probably, I mean, obviously I wasn't around then, but what people felt like in probably 2015, or probably more like 2016, when Bitcoin was probably in the $600, $700 range, getting closer and closer to that $1,000 or $1,100, $1,200 mark, where Bitcoin peaked in the end of 2013, 2014. And so, yeah, we're seeing that again, and it'll be interesting to see. Now, macro-wise, things are different, though, and that's the only thing that scares me, macro-wise. But I'll probably leave that very short and simply. Macro-wise, at that time, central banks were still using quantitative easing, which is basically allowing free money to flow, and money doesn't. What's the correct word for it? It doesn't care where it goes. It doesn't really care. Once liquidity is pumped in the system, it goes. When the
and you can see that spillover happen into malinvestment, and that's exactly what happens. We saw it with ICOs. We see it with crazy startup ideas raising hundreds of millions, if not billions of dollars that are burning cash. You see it with the crazy housing bubbles that we're seeing across the globe. I mean, the money spills out and over into these things and starts to inflate them. And, that malinvestment is driven by cheap credit. We see the same thing here. So it's not a surprise, but the macro is much different this time around. And also I think the fundamentals are different this time around. We didn't have Cash App. We didn't Facebook, or Coinbase was even taking weeks to get people onboarded. Facebook wasn't launching their own stable coin. It's so different now. So it will be interesting to see the timing of all of this starting to happen all at the same time. That's going to be really fun to kind of sit back and make podcasts about.
Yeah, no. And I think that might be a good way to close this one up so we don't run you guys too long here. Otherwise, I could talk about macro the rest of the night. And I'd better leave that for another time where we're more focused on macro, because I can talk about it forever. But I just want to say thank you, everyone, for listening. As we always say, please leave us a review and a rating on Apple Podcasts. That helps us hugely. It gets our podcast more views. It moves us up the ranks, whatever you want to say. And if you watch us on YouTube, thank you too. Please like and subscribe. And then I don't know if Spotify. I wish Spotify gave us some kind of rating system, but it doesn't. But anyways, thank you very much.
Peace out.
Peace.